Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, August 30th. It's 6:25 as I'm starting the video. As always, please run the video at 1.25x on your video player to maximize your efficiency. Taking a quick look at futures, pretty much flat across the board. I've got oil down about 0.75%, but other than that, I didn't see anything particularly noteworthy. On the macro front today, we've got pending home sales and the Dallas Fed. So pretty quiet there. And after the close today, Zoom is going to be reporting, and then tomorrow, I saw that CrowdStrike is going to be reporting as well. And remember, Palo Alto had those blowout numbers. I think it was last week or the week before. So there's been a lot of inflows into the cyber security space. So just a few comments on Powell from last week at Jackson Hole. If you remember or have been following along, we had quite a parade of Fed governors leading up to the Jackson Hole thing. I mean, Bullard was out there, Clarita was out there, a bunch of guys, Kashkari was out there, all of them kind of talking pretty tough, like, I mean, going as far to say that the asset purchases were hurting more than helping, and they would be in favor of an accelerated tapering, all that kind of stuff. So talking pretty tough heading into Jackson Hole. But then on Friday, Powell reverts to form, or not really revert. He's been what he's always been, communicating very much data-driven. If you look at that statement, and I haven't looked at it real carefully myself, but a lot of ifs and coulds, not very many will. You know, we will do this. It's if this happens and this could happen and that kind of stuff. Very, very non-committal, very dovish. We've got the August jobs report coming out this Friday. That'll be a big data point for the FOMC as it goes towards its September meeting, where a lot of people think that they're going to announce tapering and then start pretty quickly, like maybe like November, December kind of time frame. But I think the Fed is a lot more worried about the employment picture, much more focused on that than the inflation fears. So I think there's going to be a bias towards wanting to see the unemployment rate come down a lot farther than it has. You know, that substantial further progress phrase that they like to use now. I think they're really looking for some big employment numbers, like crack that million barrier a couple times, and I think that would give them a lot more confidence going forward to announce a taper and then start that process. So anyhow, the markets really like that dovish tone from Powell, and they really kicked it into gear on Friday, and I hope you got at least some of that part of that on Friday, because that was more or less a unidirectional move. Taking a look at the dollar, not going to spend a lot of time on it. I've switched up the drawing a little bit and have put this upward path here in a little channel, and we've got some overhead resistance at 93.50, and we've got some support here at 92.20. I think that's a trading range for now. If we were to drop out of this channel and then break below the 200, that would mean yields are rising. TLT, or excuse me, I'm sorry. This is the dollar. Uh, Breaks below would be a catalyst for commodities and cyclicals. You can see that here for those new to the work. We've broken it down into a couple of different scenarios where we've had scenario one or regime one be in control for a while, and then regime two be in control for a while. So we'll watch the dollar. I don't think it's the biggest fish to fry on our list, but it is really important, and especially if we transition into one or the other regimes where one group of stocks is working to the exclusion of the others. I think right now we're kind of in a sweet spot. So I think both can work right here. Also, if you're new to the channel, thanks for stopping by. If you want to go to the next step, jump over to the blog site, drop in your email. There's a link there for you. You can drop in your email and you get all my content morning, noon, and night. You also get a nice invitation to our trading room. We've had a lot of additions over the last several weeks. A lot of sharp traders, a lot of good ideas. I think you'd benefit by hanging out or visiting every once in a while to look at the ideas that are being posted. 10-year yields. We tested the lows. We got a head fake here, and now we're operating back between this 1.3% and 1.4%. I think that's kind of like, for me, the Goldilocks range that we've been talking about, where falling yields tend to benefit the bubble stocks, high-tech stocks, high valuation stocks, ARC stocks, while rising interest rates tend to favor the cyclicals, the banks, the reopening trades, that kind of thing. I think if rates continue to bounce around between 1.3 and 1.4%, I think you'll see both groups of stocks continuing to work. If you get a break above 1.4, I think that's going to tilt things towards the cyclicals, the financials, and the reopening trades. If for some reason COVID comes back, or COVID fears come back, or growth fears, and the rates do a nosedive, then I think that's going to favor mega cap tech and those bubble names as rates fall. And then here's TLT. This trades opposite to the rates, and I've put in this little symmetrical triangle that is formed here. I think the real pivot point is 150. If we get a breakout from this triangle, that would be a signal to be long TLT against 150. If it breaks below here, you've got the 50 and the 200 acting as support. You can be short on a breakdown below 150 if you think yields are going to rise, but I would put a hard stop right above that 150 level, maybe 150 and a half, something like that. But I think the floodgates would really open if price came down to take out the 200, and then it would have more of a clear path with rates running to the upside. Taking a quick look at our oscillators. Here's the NYSE McClellan. Had a pretty big jump on Friday, went from -10 up to 23. So it's on an upward trajectory here, and we're just going to have to just stay on top of it to see if we make this overbought level. NASDAQ had a big jump as well. We're up here at 38. not so far away from 60, where our yellow flags would go up with an overbought condition. So depending on how it goes here the first part of the week, we could possibly see some of these numbers, by, well, it could be today if things go crazy. But this one's definitely on the radar for me as we move up. And if we do, in fact, tag 60 or go above, probably be a place where you want to lighten up on some of your tech stuff, because as you can see back in time, it usually portends a reversal once you get above 60. Percentage above 50 jumped up to 62. That's the highest it's been in quite a while. You can see that we've been trapped here below, spending a lot of time below 50, down in the mid 40s, and even got down to 26. Now we're at least above that 55% level, and that's telling us that more stocks are participating, and there's been a certain degree of healing underneath the surface. So that bodes pretty well for the market in general. You can't survive that long with less than 40% really participating. So that's good to see that that's bouncing up. Equal weight SPY just keeps grinding away. Actually, it outperformed the cap-weighted SPY. That's another indication that participation is broadening. The thing to key off of here, if you're keeping this chart at home, is price above the 8, 20, and 50-day EMAs, with all of those curling higher, and price above everything. So it's really hard to get too bearish with price breaking to new highs, all the EMAs curling higher, and so it looks good. We've got these persistent bearish divergences up top, but that's not a buy or sell signal. It's a condition that we want to see burn through. What would it take? Well, it would take price moving up and then having RSI break out and then having momentum break out, so that the indicators are in line with the price. Right now we've got a new high in price, but at lower momentum and lower RSI. Not really something you want to see, but not a reason to get out either. What I'm going to do as we go into the indexes is just, a lot of times we focus in on the short-term time frames because we're active traders, but I think it's important to check in on the daily charts every once in a while. So that's what I'm doing here. And you can see that we've had a nice rising channel since late April, with price being contained, by the outside of the channel. And we've got this nice midpoint that we've been using as a reference level as well. So now we're at the top of the channel. And the question now is, do we get a reaction that brings it back towards the middle? Or do we break out right here, make a topside channel breakout? And again, just like the equal weight, we've got price above the 8 and 20 EMAs with all of the exponential moving averages bullishly stacked. And we've got the bearish divergences as well. So very much the same picture that we've been working with. Just, keep the bearish divergences in mind. I think it's important to have that yellow flag be out there, even if it's just for the simple purpose of not having you go crazy, mega bullish, piling in at the top. We are in the last week of August. There's going to be light liquidity out there this week. This is really the last chance for any vacations before the fall season and school and all that kind of stuff really kick into gear after Labor Day. So there can be some wild things that go on in that low liquidity environment. And I'd hate to see you be at, max leverage long right here at the top against the top of the channel. It's fine to be bullish. I'm bullish. I'm positioned bullish, but not up to my eyeballs in longs. Let's put it that way. I do have some cash available if we get a pullback into, say, 445, 442. And I think that's your pivot point right here at 445 for those of you on the daily time frame. 2 hour, same kind of look. We do have a little ledge here at 449. I think you can stay long against that and look for a push up towards 452 if things remain really bullish. I think that's the next overhead resistance level. On the downside, we've got the midpoint of the channel that will act as support, and we've also got this 447. So 449, first support, 447, second support. Here it is on the 30-minute chart, just exploded. A few little micro levels in there. You can see the big impulsive move off of the Powell talk. And, just looking at Friday, there were a lot of chances to buy. As we reclaim these levels from below, there were opportunities to, get in here, even as late as here and do quite well. So anyways, always just keep that in mind when you're recapturing technical levels from below. That's always an opportunity to buy, and with a stop just below. And then what you can do, remember in your active trading, let's say you got long at 447 and you bought your full position. You didn't kind of leg in. You went with your normal position. As these levels are recaptured, those are places where you can ratchet up your stops during the day. Because, we don't know that this is going to happen. It could reverse. So as you move up to 447.50, you raise up your stop. You take out the next level, you raise up your stop. You move up to the next level, you raise your stop. And so all along the way, you're prepared to get stopped out, and but with a profitable trade. So you can use these levels in a number of ways, either to get in on the way up or get out if there's a reversal. Qs, nice rising channel. We continue to grind higher. Price above all the moving averages, bullishly stacked. Bearish divergences. Midpoint here. I think your first support on the daily time frame is 370. I think anything above 370 is going to keep it bullish, even if you wanted to drop down to a level. I've got the 20 EMA at 368.85. So as long as price holds this 370, 368 level at the 20 EMA, I think the bulls are fine. I would like these bearish divergences to get worked through, but just hasn't happened yet. Here's the 2-hour chart. We came out of this $8 trading range, and we made a quick move, came back a little, and then launched on Friday. I think you've got a level here at 375 that you can stay long against. If you start to lose 375, you've got 374 and 372 as levels below. As we've talked about last week, there's a big void here between 372 and really even going down to 369 with this gap. If things start to get a little shaky and price comes back and loses 373, I think that's a place where you could try a tactical short down to 369, simply because of this price void. There's not going to be a lot of support in that area below, but as it stands now, it's got a bullish look to it. IWM, this has been a real nice trade for us and offers some lessons really about a lot of things, really. You've got a big trading range here, rejected at the top of the range quite a number of times, and trips back and forth between the top and the bottom of the range. Support, 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 support. In this last rundown, that was your, on the tag at the bottom of the range, that was a golden opportunity to get long. Why? Because precedents had it that that level was going to hold, and you even had the 200 coming in just below where you could get long as well. And then we've gotten the big move off of the floor, and now we've taken out this 224 level, which I had marked as being pretty important. And so now with price above 224, I think the door is open for a move back to the top of the box. You can actually even look at this as a double bottom. Here's the first one. Here's the double bottom. You take a measured move of the height of that structure, and now we've broken out, so that measured move puts us back up at the top of the box. Doesn't mean it's going to happen, but the technical setup is there. If you're long IWM, if you got long on this breakout, stay long against 224 and look for 234. So you're looking for a $10 move above 224 up to the top of the box. Here's some granular levels. Here was the breakout. I think if you're actively trying to trade this, I think you can stay long against 225.50. Here's some even more granular levels. Here was the breakout from 224. And if you actually go look, IWM has been outperforming the other two indexes on a percentage basis during this run. So maybe small caps are starting to get a little more enthusiastic to the upside. So let's go through FATMAAN quickly. Facebook got our gap fill on Friday, right up here to this 373 level. That'll give you traders a really good line to shoot against. On a break above, that'll take it to all-time highs. All-time highs you got to buy. So on a break above 373, let me see if I can pull that up here. Yeah. The prior all-time high was 375. Here's the top of the box here on the gap. You get a breakout above, decide how you want to play it, but above 373 would be a place to buy. and then a breakout to new all-time highs at 375 would also be a place to buy. Apple didn't do much on Friday. All these levels are continuing to work. Today, it's pretty clear 148.50 is your pivot point. I think bulls are okay above, and bears are okay below, and you see these support levels down here. Tesla, more consolidation inside of this prior gap between 705 and 715. I think while it's inside that $10 range, I don't think there's a trade to make. I think you've either got to get a breakout here into this gap that has yet to be filled, or get a breakdown down below 700. I think in here it's just tough trading, and $10 on a $700 stock, it's going to be hard to make money. I think you need to get either a breakout or a breakdown, something a little bit more definitive to try and get a point on the chart that you can not only shoot against, but stay long or short against for a little longer than just a couple minutes. Microsoft, I think this is going higher, but it really hasn't traded that well the last few days after this big explosive move. I would have preferred to see more of a consolidation, but it's pulled back. So now I think 300 is the pivot, and I think if it can kind of eat through all the people that want to be faders, then I think it's going to go off to the races. So I think today 300 is your pivot. If it can recapture that level, then break back above 302, then it can challenge these prior highs at 305 and then go off to the races. Amazon, nice little move off the floor. It's taken quite a bit of time to do it, but I think now 33.75 is your active pivot. If it can break into this gap, that's going to be a big opportunity to the upside. If it runs into trouble, as it did back here, then you may see a pullback into 3,300. But I would, at least at this point, I would favor the long side. I mean, you got to trade level to level, and I don't think this is a place where you can really, front run a trade. I think you got to see 33.75 taken out. That'll be your cue to get long, and then you can look for moves up into 3,400, 3,450, that kind of thing. So yeah, I think this 33.75 is your pivot. Google just keeps going. I mean, just stair-stepping its way up. It's either consolidating or going up. Consolidating or going up. I mean, there really hasn't been much corrective activity on Google at all. If you get a little pullback into 28.40, I think you definitely hit that long. I think on these micro levels, I think there's a little shelf here at 28.75. If it, consolidates along here, you can get long. But I mean, the trade on Google has been for this whole time is just to stay long on the daily time frame, because there hasn't been really any indication along the way that it wants to pull back. We're at a critical spot on Netflix. We've been looking at this $90 trading range for a year, and now price is right up to the top at $560. I think if you're interested in Netflix at all, if you get a breakout above 560, I think you got to take it long. There were some fake moves back here that ultimately failed, but I think you got to take on faith that if you break this range and hold it above 560, you want to be long, and then look for that measured move up to 650 on a breakout from a $90 range that targets 650. Semis, all-time high, I believe, and I think you can stay long against 271. I think it's just as simple as that. If it can hold 271, it can go higher. A break back below, you probably come back and back test this 268. Some of us were in this Affirm, AFRM. There was news after the bell on Friday that it's in some kind of partnership with Amazon. It had traded up to 103 in the aftermarket, and I looked pre-market this morning, and it's in the 93 range. I know some of us had a 75, 95 September call spread. If you're in that, or if you are, if you're in the spread and it's trading up above 95, you're pretty much maxed out. If you want to stay in the trade or set that up as a bracket trade going forward, you can close your position and then continue to follow the position as a bracket trade. If we're simply in calls, then you can hold that position and then just move up your stop to wherever you would want to take profits on any kind of pullback. But that was nice news after the bell on Friday if you were in that stock. And just one other one to show you this morning, this Zim marine shipper, one of the few really nice IPOs this year. You can see it IPO'd down here around $12, and now it's trading 47, 48. Anyways, we had the prior high at 47, pulled all the way back to 32, and now it is broken out, but kind of pulled back right in on this back test. And I think if you need a marine shipper or want a marine shipper, I like this long against 47 on ZIM. So you can see all the EMAs bullishly stacked. So from that standpoint, looks good on the breakout. So let's wrap it up there. Let's see if we get follow through from the big Friday that we had. So as always, trade level to level, honor your stops. I think you'll have a good day of trading. And I will talk to you later in the day, I'm sure. This has been Chris Buss with Traders Profit Compass. Talk to you next time.